Alrighty, we're gonna tackle chapter 8 and learn about prepaid expenses, budget, and all that kind of good stuff that you will regularly need when you do your monthly journal entries and so on. Okay, so we're gonna be in Greg's Designs and Landscaping Services for right now. And I decided I'll work this chapter through it completely as there's a lot of new stuff. So the first page is our learning objectives, and that we are in Greg's Designs, and we go to recording other current assets, which are prepaid expenses, for example. So you're going to read through all of this, and then we're going to go right into Develop Your Skills 8-1. On August 1st, 2026, Greg wrote a check for $3,500 to the insurance broker for 6 months of auto insurance. He used check number In this exercise, you will set up a prepaid expense account to manage the prepaid asset. So we are in our test drive, and I already opened it up. And now they're asking us to set up a new account. So there are multiple ways. They say go to gear and click chart of account. I like this function here, so I can see already a little bit. And it's always useful to see if you have an account like this already. So you see there is already a prepaid account. However, they want you to create a prepaid account. So I'm going to say new. Prepaid account is an asset account. Prepaid expenses, and they want us to name it prepaid insurance. Okay, so we've got that down. We're going to say save, and you will see it's going to be a sub account under prepaid expenses. All right, so next, Greg is writing a check. And we know how that works. We go here to new vendors and checks. And he gives us the name Ross Nahan Insurance Agency. We're disregarding this. Okay. And then we are checking. We have the address, and this is going to be 8/1/2026. Check number 10071. And then here we're going to say prepaid insurance. Prepaid auto insurance, September through February. Okay, and then we have the amount of $3,500, and that should be it. We're going to say save and close, and go to the next page. Journal entries and recurring transactions. So you have scheduled, you have reminder, and you have unscheduled. They are all useful tools to make your life a little bit easier, so you don't have to deal with paper that much. You don't have to go into your folder every month and see, okay, what do I have to do today? Now you actually set it up as a reminder or a scheduled transaction already, and it will automatically be done. Watch the video, and then we're going to go into Develop Your Skills 8-2. We are asked to create a journal entry for the insurance expense September. Okay, so how are we going to do that? We say new, other, and journal entry. So things where you make a journal entry besides these are all here. Okay, so you remember that we did our inventory quantity adjustment, and later on you can create statements. So all this kind of stuff is here that is not regular with our customers and vendors. And then we're going to go in journal entry. The date is September 9th. This is when we want our insurance to be posted the first time. And then they want us to say tab twice, 1, 2, and you're going to be in this account section. So it will say in line 1 of the account field, type auto insurance. So now we're going to go into our expenses. And it does not appear to be there, and it does not really tell us. It says, oh yeah, you will start by adding an account for the other insurance expense. No worries, we'd love to do that. So it's an expense account, and let's see if it's, I would say it's under auto, and then auto insurance, save and close. So then we have this. Debits is 5833. And we say expense 1 month of prepaid insurance. Okay, we do not have a name, but we have to have a counter account, which is the prepaid expense. And here it's the sub account, and this will automatically be there. So description field 3 times. In the account field for line 2, prepare prepaid insurance. We did that already. Confirm 583. Yes, we confirm. And this is how it's supposed to look like. You have a journal number, and these can be overwritten in your QuickBooks. It depends on the policies that your company will have. So it looks good, and we can actually say save. Okay, so let's read here what it says. Confirm that the description from line 1 also appears in line 2. Yes, if not, type it in. Your completed journal entry should appear similar to this image. Yes, it does. You can see that the debits equal credits, which is a requirement. If the journal entry does not balance, you will not be able to save it. Okay. And then we're going to click make recurring. This is down here. And now you have an extra line or lines here that you can name it. And we're going to name it prepaid auto. It's scheduled monthly day. They say they want it on the last day. Once a month. And then they want it to start on 9/30/2026. And the end is by 2/26/2026. Alrighty, so we have this set up. If that looks good to you, you will be saving it. Okay, and you're going to say save template. And I want you to go back to the dashboard. And now you have to look where your recurring transactions are located, and they're located under your lists. Go here, and you can already see there's more in there that we did not set up. It was already set up, but this one here is ours. And I have not figured it out why this is not appearing, but it will be okay. Okay, so we're done with this page and we're continuing on to long-term liabilities and fixed assets. Greg has decided it's time to purchase additional trucks for delivering products and moving equipment from worksite to worksite. He has found 2 Ford duty trucks for a total of $45,000 each, with $1,000 down for each and a balance financed for 3 years. In this exercise, you will start by creating the fixed asset and long-term liabilities accounts for the 2 new trucks. Then you will record purchase and liability for them. You may need to add vendors and accounts. Okay. So we need a new account. And they say complete the field as indicated in the created. Create the fixed assets. Okay, so we're in the assets. We do have fixed assets. Okay, and there's a truck. It calls for vehicles, but I don't see it. Fixed truck. And then the vehicles are here in account type. And then account name is 2026 Ford Super Duty. Description is 2 Ford Super Duty trucks. Okay, and it says save and new. So also when you go in here, you cannot find anything with vehicle. So I'm not sure what they are referring to. Sometimes the book is a little bit off because there's constant changes. So we're just disregarding the vehicle and using the truck that they actually gave us. Okay, so and it says detail type vehicle, so maybe this is sufficient enough for them. So we did save, complete the fields as indicated to create a long-term liability. Okay, we're going to say Lutz liability. You want to choose long-term liability. And they do not say notes payable, just long-term liability. It is other long-term liability. And we're going to name this Ford Trucks Loan. And we're going to say save and close. Now we're recording the purchase. We're paying with a check. And the vendor is Holiday Ford Finance. We don't have them in here. So we just have to add the vendor. It's Holiday Ford Finance Company. Okay, we're going to say save. Count is checking. The date is 1st of September. The check number is 72. Category line is 2026 Ford Super Duty. And we're going to say 2026 Ford Super Duty trucks. The total amount is $90,000. It's not billable to a customer. Description line. Okay, and now we say here, this is Ford Fax loan. And this is also to 2026 Ford Super Duty Trucks 88111. Oh, it should be a negative. Okay, so this is, here we have the asset, here we have the liability. They subtract each other out to a $2,000 that is due because it said we're paying down $1,000 each. So, and that will be it. Save and close. And we got this in. So if you want to know if you did that correctly, you just go into your reports, you pull a balance sheet, you can specify it to 1/1/26 to make it October because we're already doing September. Run report. And so let's see where our trucks are. Our trucks should be in fixed assets. They're there, 90,000. And then there should be a liability for the trucks, which are here, 88,000. So that's correct. And then we should also have a prepaid insurance here of $3,500. Okay, so I'm going to go back to the dashboard. We're done with this, and now we're saying transferring between accounts. Greg has authorized Holiday Ford Finance Company to automatically withdraw the monthly payment on the truck loan for the next 3 years. He has asked you to set up the accounting in QuickBooks Online. In this exercise, you will create a transfer to record the monthly payment to Holiday Ford Finance. Then you will make it recurring. Okay. So we're going here to transfer, and we're choosing checking. For truck loans, they're here. And we're saying the amount, 2445. And we're starting in October. Okay. And we're typing here, monthly payment. So we've got this in, and we are going to make this recurring, which the template name is truck loan payment monthly. Create 3 days in advance. Day 1 first, starting date 10, and we're ending it after 36 occurrences. All right, and we're going to say save template. Checking it, oops. We're checking it in our recurring transactions, and you can see it right here. All right, next is the petty cash. Greg is looking at opportunities to have a small cash box available for deliveries, postage, and occasional reimbursement of office or field expenses. You may decide you have decided a small locking box in the office can hold the cash and receipts. In this exercise, you will establish a petty cash amount and reimburse an employee for a permit that he paid for. Okay, so we're going to choose new vendor check. They want us to add a vendor here that is called cashier. Payment field is 9/6/2026. The check number is 73 at the end. And then we type petty cash. Going to add that to our account, which is, I know it's not a bank, but all the cash that you have liquid, which is bank and cash on hand, will be on the bank. The detail type is cash on hand, and we're going to call it petty cash. Save and close. The description says establish petty cash, and the amount is $150. Okay, so we have this, and we're going to say save and close. Now, if you want to check if everything works out, you go into your balance sheet and see if there's now a petty cash account of $150. Now we're reimbursing somebody for their prepaid expenses. We're going to say new. And we're not reimbursing them with a check or bill. We're actually paying them cash. So we're going to say expense. It says expense forms do not require a payee name. This allows you to keep your vendor list free of one-time vendors that you don't need to keep a record of because you don't want to add Craig's employees as a vendor. You will not add a payee name to this form. Okay, so we're disregarding this. We are actually paying it with the petty cash now. The payment date is September 8th. Payment method is cash. Okay, they don't want you to use this, so we're just disregarding that. And then they want us to okay, so we have this, and then they say 3 times 1, 2, 3, which is not really where we want to go. We want to go into category field. So we're going to say category permits. It's already a sub account. And then we say reimbursement for permits on Smith job site in. Okay, and then the amount is $26, and you say save and close. So if that would be my company, of course, Smith would get the $26 on their next bill, and I would put it here so I won't forget to invoice him about that. But this is not my company, and we're just following the book right now. And we're going to say save, close, it's done. All righty, and then the next one is handling uncollectible receivables bad debt. So bad debt are debts that people have with us. So they owe us money from previous invoices and they haven't paid it yet. And we are not really sure if they are going to pay it. So we have to evaluate that. And that's basically what we're going to learn right now. So Greg has notified you that Cookies by Kathy has gone out of business and will not be paying the $75 due from invoice number 1016. In this exercise, you will start by setting up the service product and the account for the bad debt. So we're going to say chart of account, click new. We're going into the expenses. We select bad debt. Trying to find where we can put it the best. And it's just cost of goods sold, expenses. Let's put it in here. And then we have bad debts here, and we're going to call that bad debts. Okay. Save. Going to go in our product list. Say new services. Going to say bad debt. Description is write-off uncollectible. The sales price is 0. Income amount account is bad debt. And then the sales tax category is non-taxable. Okay, done. Right, save and close. Okay, so it says type is an expense account, and then we write it off in here. And income account turns into an expense account, and it's called bad debt. Okay, so now we have create a credit memo plus credit memo. And we're going to say cookies by Kathy. And it's now September 10th. We're going to say bad debt. And the write-off is $75. Okay. So we have the description, the amount, and we're going to say save and close. If you want to see if that has been applied correctly, you're going to go in sales, customer, going to look for Kathy. And you will see that the $75 from invoice 1016 are now closed out. It didn't say pay. Well, here it says paid, but here it says closed. And you will see it's a credit memo. So you can actually identify that this hasn't been paid. Okay. Usually these kind of people need to be inactive, but the book is not telling you that, so we're just leaving it as is. All right, creating and reviewing a budget. So now we're going to get into a bit of a problem because obviously the subscription has ended on that. So there were some subscription adjustments in QuickBooks, and I feel like this problem, what we're running into right now, occurs from there. So let's just do as much as we can, and then we'll continue on because it will not be a problem in your puppy love. Okay, we're going to say gear budgeting. Create a budget. It's going to tell us to do a budget in 2026. And then we're going to say next. And just look here for a second. You can actually import it too. A lot of people will send you Excel files, and you will have to give them the format. They have to stay in the format. Otherwise, you will be the one changing the format. And this is just taking time from you. So when they create their budgets and you have to import them, they have to do it themselves in a correct way. Otherwise, send it back and tell them to fix it. Next. Okay, so it tells us to do a budget for the fourth quarter. So we're totally disregarding this all here, and we're going to start with October. Okay, and they also want us to do them. So you see how it's different here. So we cannot even name it right now. We have an interval of monthly, which is that click here. We have no pre-filled data. There's not even an option anymore to say that here. And then don't subdivide. So we just have this available to work with. So there already has been a change in here. So we're going to put our budget in here, and it says that we're expecting $5,000 in October. And then you can click on this little doodad here, and it will autofill this until the end of the year. But please override this because they're only expecting 2,000 in December. All right. So this is this, and that was number 7. So I'm trying to save it, and you're just gonna look up here what happens. It will give you your subscription has ended. Renew your subscription to continue adding and modifying data. So this function, or this budget, we were able to do last semester. And since there has been a lot of change, we cannot really do anything with it right now. We could enter all this in it, but we cannot extract a report. So Dr. Lambert sent you all an email about that. Read the email, and we're just going to continue to tackle the task and disregard this section for right now. Okay, so I'm going to close my budget. I'm going to say yes. I'm not saving it because we cannot save it. And we're going to continue on this. And when you work through this, do all of this, and then the last 2 budget reports, we're just disregarding. Okay. So let me see. I'm going to stop and record a separate video for tackle the task.